good evening, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me well? Tell me, please. All right. So, students, I'm opening, actually, there was some issue in connection of the students. They were connecting and some links issue were there. That's why the class started a bit late. So, just give me 1 minute only. Okay, I'll proceed with today's class. Okay, students, we have done two types of questions on controls and test of controls so far. There are two types of question which we have done so far. One was the question on they were direct control and test of controls. The other were deficiencies and recommendation. And the third type of question, which is rarely tested, means now in the last 2-3 years, it has not been tested, but it can be tested. Yes. What is that? That they say the third type of questions may have 3 requirements: deficiencies, control recommendations, and test of controls. Third type of question means it will have 3 requirements. Yes. So there will be 3 columns. There will be 3 columns. So deficiencies, control recommendations, and test of controls. 3 things are there. So the questions in your exam kit, there are certain which are tested on these 2 areas actually. Let me open the exam kit. This means this type of question. Let me open so that we can start working on such question. Yes. Yeah, latest question was tested. Yes, it was tested. I was wrong, sorry. I thought it is old question, but it is December 2022 question. That's quite, it means it can be tested. You see, the requirement is here in front of you. 20222, it is December 2022 question, Daley company. And identify and explain 5 deficiencies. Recommend a control to address each of these deficiencies. And describe a test of controls the external auditors should perform to assess if each of these control is operating effectively. Deficiency, recommendation, and test of control. Now let us yes, so 3 requirements, 15 marks, like this. So identify, and the first two parts are the similar way we did these questions in the last sessions. So now come here. Yes. So 5 deficiencies we need to identify. 5 deficiencies. So it is 1st July 20x5. Daley Company, a listed manufacturer, double glazed windows and doors. The company's year end is 30th September 20x5. You are an audit supervisor with Cooper and Company, and you are in the process of reviewing the following extracts from the internal control documentation in preparation for forthcoming audit. The company employs 210 staff in factory who are paid on a weekly basis by the bank transfer. Factory staff have key cards and are required to swipe in and out at the beginning and end of their shifts. This process is supervised. Hours worked by the employees are recorded electronically using the key card system, which is linked to the payroll system. Each week, the hours worked now, students, each week the hours are automatically transferred to the payroll. As process is automated, no check, no check has been performed on this transfer. They say that key card system to the payroll system, data is automatically transferred. So I will just highlight it for the time being instead of writing about it. No check this. This whole is the first point. Yes. Point 1. The payroll is, in exam, you can highlight like this. The payroll is run on a weekly basis. The system automatically calculates the wages to be paid on a sample basis. A payroll clerk checks gross to net pay calculation and compares these to system generated balances to ensure the accuracy of payroll system. Now, so if any changes to payroll are required, the payroll makes amendment and audit report is generated but not reviewed. What is audit report? Whatever clerk is editing, its report is generated weekly, but no one reviews that report. Deficiency. Now, so next point. So two deficiencies we have identified. Delhi has a head office and 10 factories with a Warehouse included each factory. The company has internal audit which carries out a comparison between all the assets recorded on non-current asset to those physical present on each of 21 sites. The program, which has been planned and carried out on the same basis as previous year, means that they will only complete on one site and one, yes, factory. One site and one factory only. Now, next point. During the year, financial control changed the company's capitalization accounting policy. Right, capitalization accounting policy. In accordance with the policy, only item of a capital nature exceeding 20,000 are accounted for as addition. No. Below that, they are written. $20,000 is huge. Okay. You can get $15,000 a car. No, you can get that. Yes. On a weekly basis, the payment list is generated for the suppliers' payments. The finance director reviews the total amount of bank payment list and authorizes it. The finance director then passes it to financial controller. Okay. He just checked the reviews, the total. He's not reviewing anything details that what is being paid. Now, Delhi company incurs a lot of petty cash expenditure, and the finance department maintains a petty cash float of 500, which is kept in safe. It is used for making any sundry expenditure purchases by the company. When staff wishes to purchase sundry items, the required sum is given to the staff member who signed for it. Okay. The staff member is required for any excess amount money, but there is no requirement for receipts to be provided. Yes, there is no requirement. The cashier reconciles the main current account on a monthly basis as it contains the highest level of activity and reconciles the remaining every 3 months. The reconciliations are reviewed by finance director. Okay, and evidences. Okay, right. This is the point. Reconciles the remaining 3. Now, how many points? 1, 2, 3, 4, 5, 6, 7. We need 5. So pick best 5. Pick best 5. You can write about. Okay. So very easy. I am starting with the last one. Okay. So the company has how many bank accounts? 4 bank accounts. Company has 4 bank accounts, but on monthly basis, bank reconciliation of current account, main current account is prepared. Yes, is prepared. Okay, but deficiency, how now you have to explain what can go wrong, how can go wrong in the company, in accounts, in financial statements. In company, in accounts, in financial statement, wherever. Now is prepared, and for other 3 accounts, it is prepared on quarterly basis. Yes. So, any error in the bank, any error or differences, any difference between bank accounts and cash book record will not be identified and fixed timely. Any difference due to error or fraud. So bank balances may be misstated at any time in company's record. Yes. Now, what is the recommendation? All the bank accounts, for all the bank reconciliations must be prepared for all the bank accounts on monthly basis and reviewed by a senior responsible official. Now, this is the control we are suggesting you should do this. Now, the third column, we assume that this is already being done now. It is implemented. We have to test it is being implemented effectively or not. Testing this control, assuming it is implemented. So, review bank reconciliations file of company, whether these are prepared on monthly basis for all bank accounts. For all bank accounts. And whether they bear the signatures of responsible official as evidence of review. So now testing this control. Now this is 3 marks, done. The staff member is required to return any excess of money to the finance department. For petty cash, they say the petty cash, they are not required to return the receipt for expenditures. They return the excess cash. Very easy to understand and write about. Staff members issued with petty cash are not required to return receipt for expenditures to the finance department. Yes, this is the weakness. Now, how and what can go wrong in the company or in the financial statements, because of it? So, staff may be spending money for non-business related purchases. Yes, thus stealing cash from the business will not be identified. First of all, prevent it. When you ask them to provide it, and identified. Both things are there. What is the recommendation? Now, so the staff issued must be required to submit receipts for expenditures, sundry expenses, basically, for sundry expenses along with excess cash. They must have to return that. And a record of those receipts must be kept by the company. Yes. Now, this is the recommendation. Now, implement it, assuming it is implemented. Assuming it is implemented. Now, what is the test of how to test it is happening? How to test? What we will see. Now, we are auditor. Company is implementing that. So what we should do? So we should be, as an auditor, review the record of sundry cash issued for a sample of employees and verify the receipts have been returned by them along with the excess cash. So review the record of sundry expenses incurred by staff members and review the record of incurred by staff members and verify. They have verify the receipts of those expenses are present in the record of company. Verify. Yes. Now, the next point is the finance director reviews the total amount of payment to the suppliers and authorizes it. Total. He is not looking in the details of the payment. So finance director reviews the total of the payments the total of the payments. Yes, to be made to suppliers and authorizes that. And authorizes that. Now, the next point. What is the issue? And he is not checking the details of the payment list. He's not checking the details of the payment list. And not verifying the reasons of the payments from any source document. Yes. Now, so what can go wrong because of it? We have just given the deficiency. So the risk is that incorrect payments, amounts of payments, or fraudulent payments can be approved by the, yes, for goose suppliers. Possibility is there, which does not exist actually. Now, what is the recommendation? The recommendation is that, so finance director must review the source documents such as copy of invoices, etc., to verify the payment amounts and names of suppliers, and then sign the supplier's payment list as evidence of this review. Yes, very easy to write test of control. Now, you will tell me the test of control. Be quick. No. Give me the test of controls. Please, be quick. Give me the test of controls. Be quick. Tell me the test of controls. Everyone, write down in the chat box on it. I'm reviewing your answers. Review a sample of payment lists. Okay. Weekly basis. Yeah, right. Sample of weekly payment lists, right? If it bears the signature of finance director as evidence of review when verifying payments to its corresponding source documents, such as invoices, etc. Now it is complete. Evidence for verifying. Now it is better. Okay, now it is good. For a sample of payments, verify the director has agreed the amount. How to verify? What is the source? I think you missed the payment list. No. How to? It is incomplete. It doesn't make any sense. How to verify? What bears the signature? What document? So your format is incorrect. It is not giving any message. No clear message. It doesn't make any sense. You see, for a sample of payment, what? How to verify director has agreed the payment? Actually, you have to verify signature, which is proof that they have verified. Okay, so format is incorrect. Sentence formation is an issue. It is giving wrong message. Evidence review of what? Review for matching of list with of the list, the payment list with source documents such as invoices. Now it is correct. Otherwise, it was not giving any message. Review for what? Review for what? If we write only this, it is incomplete. What is it? What does it mean? It is not giving any meaning. He is not signing source document. Incorrect. Verify whether payment lists for a sample of invoices. No. You are not reading it correctly. There is payment list. List one document. For example, this is document. It has name Mr. A, Mr. B, Mr. C, Mr. D. Payments are mentioned. It has to be verified from the relevant source document. This amount is correct. But you are writing something else. Invoices do not bear the signature. Payment list. I hope you got the point. This is how you do mistakes. And some students here are even reluctant to write answer again. They are in the class. Don't know why. What they want. Why they are here if they are not writing the answer. Please. This is the exact answer. Correct answer which I have written. This one. Now, Students, if you are present in the live class, why don't you benefit by writing the answer? I don't understand this science. I don't understand. I can't digest it. It annoys me actually. Don't know what insecurity you feel. I don't know why. Okay, next. Capitalization policy. They have changed during the year. So item of $20,000 exceeding due to a change in accounting policy during the year. Capital items above $20,000 are capitalized. Now, so the point is, this threshold is too high. Yes. So this revised threshold to capitalize the items means that below $20,000, all capital items will be expensed. Yes. Will be expensed. Now, what is the explanation of this deficiency? Yes. So this threshold is quite high. Yes, you are right. You're right. One student responded. Quite high. As over the year, there may be so many expenditures less than $20,000 individually may become a huge amount collectively written off in profit and loss, and which otherwise should have been capitalized. Leading to understatement of of profit and loss and non-current assets in financial statements. So, financial controller changed one thing. Such policy change, such a huge policy change should be approved by the board of directors and capitalization limit should be reduced to a smaller limit, maybe $2,000, to report. Yes, that's it. This is our recommendation. So now there are two things, 1 and 2. So test of control can be written on the both. So review board minutes of the meeting to verify the accounting policy change has been approved by them. Change related to assets capitalization. Now, we assume it is implemented. Now implemented, we are checking it. Now, second part, for a sample of capital expenditures above $2,000 incurred during year, verify it has been recorded in the non-current assets of company. Yes. So how many points done? 4 done, I think. 1, 2, 3, and 4. No. 1, 2, 3, and 4. Yes, 4 done. 1, 2, 3, and 4. Exactly. 1 remaining. So internal audit, the company has 21 sites. Company has 21 sites. And they are verifying physically verification. They are doing verification of physical assets recorded in the non-current asset register to the physically present. And this year they will do only 2 sites. It means it will take 10 years, more than 10 years to complete this program. So internal audit department is verifying physically present asset to the verifying assets recorded in non-current asset register to the physically present assets in the company sites, and only to this, and this has been completed only for only 2 sites out of 21 sites of company. Now, next. Now, this is identification. Now, explanation. So, it means it will take more than 10 years to complete this verification of assets at all sites. So, there is risk that assets may be obsolete, stolen, obsolete or stolen, and not identified and updated in non-current asset register timely. Leading to overstatement of assets in financial statements. What is the recommendation? Recommendation. So, the program of visit, internal audit program should be revised to ensure the physical asset verification is done on a shorter period with non-current asset register. Such as over 3 years maximum. Yes. Now it should be revised. So review. Now we Assume it is implemented. So review, internal, revised. Internal audit program. Whether it includes the site visits for assets physical verification. For all 21 sites locations in 3 years or not? Yes. The program should be revised. So we will verify. So 5 points are done. One more I will be writing, 6 points. Let us do. Yes. Audit report of amendment in payroll data is weekly generated but not reviewed. Yes. If changes in payroll data is required, payroll clerk amends it and an audit report is generated on a weekly basis, which is not reviewed. What is the audit report? Audit report is basically of amendments of these amendments is generated on a weekly basis, which is not reviewed. Yes. So payroll amendments, clerk can make incorrect amendments in payroll data by error or by fraud to pay off friends. Okay, so resulting in incorrect payments. Which will not be identified, which will not be identified. So resulting in incorrect payments and misstatements of payroll in financial statements, payroll cost, payments to employees. Yes. Yes, it is possibility. Now, what is the recommendation? The weekly audit report should be of the payroll data should be reviewed by a senior official of payroll department. That should be reviewed. Now, to be reviewed and for accuracy check of amendments, and the officer must sign the report as evidence of his review. Be quick. Give me test of control over it. Yes, please. Test of control over it. Be quick. Do all the mistakes. I am reviewing your answers. Be quick. Do more mistakes. More people, please. Two answers. More two answers needed only. Be quick. One more. Okay, just see here. People are elected, I think. Okay. I requested one, two are here. Right. Now, focus here, everyone. Edit report. Review from a sample of edit report. Which edit reports? Okay, of payroll. Whether it bears the signature of a senior of payroll department. Review for what? Incomplete. What for what? Reviewed for what? Self-explanatory it should be. There, yes, this is the point. I appreciate. By the payroll clerk. Perfect. Weekly audit report of payroll data. Now it is complete. If it bears the signature of senior official of payroll department as evidence of review for checking the accuracy of any amendments made by payroll clerk. Very good. To review a sample of weekly report. Good. I have already done, by the way. Okay. For a sample of weekly amendment reports of payroll data, confirm they are reviewed and signed. How to confirm? You have to verify signature. Incomplete message. Incomplete. Reviewed for what? As evidence of checking the accuracy of data. Very good. Arithmetical correct is incorrect. They are accurate. That's enough. By the clerk. So I have corrected it above. Yes. So you can note down that one answer. Yes. Now, so this question is done. Students, there are third number of questions like this in your exam kit. Similar question is that is Frisia company. You can do that as well. Similar question, Frisia company. That has a similar part. And Comet Publishing as well. That is a similar question. So these three questions are similar in your kit. One I have done. You should try the remaining as well. Okay, so only practice can make you perfect. So thank you for joining for today. So that's it. Take care. Goodbye.